Good afternoon, everyone. It's exactly 1:30, and welcome to our VectorVest weekly presentation. It's great to see you all. The room is people are streaming into the room as I speak. Hello, Carwin, and who else? Andy, Dave, I've said Christopher, Steve, Jill. I've said hello to Julian, Tim, Jack, Trevor, Mario, Bob. Hello, Bob. Hello, David Atherton. Okay, I'll see you next Tuesday night, I hope. And there's Bill from Scotland and Christine. I think that's everybody who said hello. Folks, welcome to our weekly webcast. Not the best morning, but we have to take the thick with the smooth. Hello, Anthony. In my humble opinion, the markets needed a reason to come back, and my word, have they sure got it. Okay, a very, very serious situation on all our hands. I think it's just a matter of time before the darn thing arrives on our shores, but let's just move onwards. A very difficult situation. Hello, Nigel. This afternoon, folks, I'm going to speak briefly for 10 minutes. I'm going to try and time myself for 10 minutes at the very most, and then we're going to. I'm going to ask Mark from our Oxford user group to actually come and spend most of the afternoon with you. This is what I want to try and plan to do over the course of 2020, where I'll invite in guest speakers, very experienced investors with VectorVest from our user groups around the country to show you how they're using it in their own way. And all of them have got a great deal of experience. David agrees with it, just needed a reason to come back. So let's have a look at what's happening here, folks. I have to put this up, and I'm not allowed to give one-on-one financial advice, as you know, although I'm qualified to do so. What's missing is the fact find that I would have to sit down and do with you at great length. And in the absence of that, I can't give one-on-one financial advice. I speak about the shares that I hold myself because I want to prove to everybody that I'm trading and not talking about it like every other sod out there. So although those shares may be suitable for me, they may not be suitable for you. And you've seen over the years, folks, that I make mistakes, and I do get involved in shares that have got low RS, low relative safety, to add a bit of spice to the portfolio, and also because I spent most of my life trading in commodity shares. Those shares definitely may not be for you, okay? And Mark is going to try and fix us this afternoon because he'll be looking primarily at shares with a long and established track record. And that's just great because that's exactly what we need today, Mark. Exactly what we need today. The three cornerstones of VectorVest, folks. What's the share really worth? How safe is it? And then some idea about the trend. So this puts together fundamental analysis and technical analysis. What's the share really worth? How safe is it? Fundamental measures of the share with a technical measure. As you know, we put a number to value, a number to safety, and then a number to the trend. And then Dr. Toledo sorts all of the shares by the master indicator, which is a combination of value, safety, and trend. And I'm going to go into the program straight away. Those of you that are new, folks, if you go to training, we'll talk you through all of that, okay? So if any RV, RS, and RT is a mystery to you, if you play lesson one, that mystery will no longer be in your mind. That'll sort that out. That's the front page of VectorVest, folks. Another man we must have on these Monday afternoon meetings as a guest is Carwin from Wales, because Carwin's got a tremendous amount of experience in interpreting the home page and the MTI and the buy-sell ratio. at the moment, folks, the UK market is in a down-up situation, which means that the short-term trend is down and the underlying trend remaining up, and we're still in a confirmed up situation. So there was a red light on Thursday, and there was also a black star within the red light, which means that the price was falling that day, and momentum was also falling. So that is a warning signal. Now I've gone through all of these, and I'm not going to pull them up. I've got them in a PowerPoint presentation, and you've got them in your own VectorVest. But to save time, folks, that's where we were a second ago. There's the red light. So we've had three signals to the downside. The primary wave is down. There was a red light, and there was also a black star in the red light, which actually shows that the price was falling, and the momentum of the price measured by the RT was also falling. So, and there is the VectorVest composite, and not a great deal of divergence here, because as you can see, this was making a falling top, and that was also making a falling top. So it's not divergence, but nevertheless, this is going to be markedly down after today's trading. The last time I looked, the FTSE was off by, 150 points or something. So, no real divergence. The buy-sell ratio is falling here, falling strongly. It would have been certainly easier to read if the price were rising and the indicator was falling. That'd be more straightforward. The last confirmed up from the middle of October here. Okay, so no, well done, Eli. Eli says he's buying Griffin. We had a great run in Griffin in the past, didn't we? I haven't looked at it in a while. That's the DEW. It's still up, as my granny used to say, by the skin of its teeth. It closed down below the moving average, but the DPO, just by a tick, didn't go down through zero. So that's hanging in by the skin on its teeth. All right. So the DEW nearly turning. I wrote about the DEW last weekend in the essay for those people that are troubled by it. So the longer term trend is still up, the shorter term trend down. We need to be very careful here. We need to be very careful indeed, and certainly a breakdown below those lows, and then the DEW will definitely be down. So there's an awful lot of signals saying that there's a pullback coming, folks. I have a question before we leave this. Oil has coming off, David. I've been very negative of oil for the last 6 months. I haven't had an oil stock in 6 months, 3 months anyway. Oil wasn't talking to me. It was going nowhere in the upside, and I felt it had a pullback strongly. And but I didn't make any money out of the short, so might as well not talk about it. That's the cable. I got stopped out of this. I actually shorted it here. I was stupid, and I got stopped out at entry. Took a little bit of it. It's gone up, taken out that top and reversed. Now that's what I call an up thrust. And I made a little bit of money out of that on Friday. So the US, folks, the US a little stronger, but it in fact turned down on Friday, and I think the really damning thing about the US on Friday was that outside day that it charted. Now that's a very negative picture. Now on the US market, I think, Carolyn, the price was rising, but this MTI in fact was making a falling top. So on the American market, there is definite divergence between the price and the MTI, and that's quite a leading indicator. So on Friday, we had in fact a outside day. I'll explain the outside day in a second. That's the DEW, and it has got a way to go to print a sell signal. And that's the Dow itself, and this is the outside day that we had on the Dow. Now, those of you that follow my work will know that I look for 78% retracements. And the high on Friday, it gapped up on Friday afternoon, and it went to 78% of the previous range, and then it sold off the whole day. It was a day trader's dream of a day. It just kept falling the whole day. All you had to do was sit and brew tea, which is what I did my best to try and do. An outside day like this, preceded by that level of divergence, is a short position, and the primary wave is already turned down. So I think, folks, that we can quite easily see a pull back to here without any sweat whatsoever, and the bull trend would still be up. So I think that this afternoon you need to make a decision. Are the shares that you're holding investment shares, and you're going to hold them through thick and thin, or have you got a position trading philosophy where you're going to try and lock in some profits? And if you are going to lock in some profits, you need to just sit down and decide where you're going to put those stop losses. Because we could easily have nobody knows what's going to happen next. I don't think anybody has a notion of the seriousness of this particular virus. So we just have to be exceptionally careful here. What can happen, especially in mining stocks, is that China goes into a lockdown for 3 weeks to a month. There's no construction, there's no copper used, and the price of copper falls through the floor. And I assure you, mining stocks will fall through the floor a nanosecond later. So, Mario, have I answered your question? So one has to be very careful here. I don't know what's going to happen next. In terms of managing the trades, I've tried to suggest a methodology that makes it emotionally easier. When you've made a little bit of money, take half off, get your stop to entry. And on many of the trades that we've had during the last bit of last year, folks, with that methodology, your stop loss, your trailing stop loss should be well above your entry point. And that's one way of, it's not the only way of managing a trade, but it's one way of managing a trade. So just be very careful indeed. All right. So folks, for the main part of this afternoon's presentation, I'm now going to call on Mark. Dow Futures, Charlie tells me, is down 430 points. Yes. So that's one hell of a sell-off. Don't be shorting into that, folks, because as soon as it'll rally and stop you out. All right, so the short side is much more difficult than the long side. It can fall through the floor from here, but I would doubt it. I think the insiders, as soon as the floor opens, will push it up to stop everybody out before it falls again. So just be very careful indeed. You would need probably, I don't know, David Atherton in Manchester is a intraday trader. You would probably need a 750 point stop to keep you in that trade. All right. So I'm now going to call on Mark to talk about what I think is an incredibly important subject for a day like today, looking at robust shares that have got a history of making money over many years, where we don't have to, in fact, stress too much. So now, Mark and I did a test of this, but as you know, I'm a bit of a technological clot, so it's going to take me a little while to get this done. So you'll have to bear with me a little bit. Okay, now, Mark Crittenden, and you have to excuse me, Mark, I find it a little difficult. Paul is much easier. Mark spent 17 years in the Army, and he, in fact, came out of the Army as a senior instructor for teaching and maintaining the Rapier surface-to-air missiles. He started his own business in the motor trade, and in fact, it was very successful for him, and he retired from that business in 2012, and he now spends his time between the UK and Malta, where he's sitting today. And along the way, he's done an awful lot of investment courses. I first met him. He became a member of VectorVest in 2013. I first met him. I think, Mark, the first time I met you, you picked me up at Twyford Station to go to the Oxford User Group. I think that's the first time we met. he's done a lot of work from US trader William O'Neill, who I know exceptionally well. So Mark, it's a great pleasure to have you here, and I'm just going to try and make you the presenter as we did on Friday morning. And Mark, I think now you've got to, yes. And Mark,
right.
So guys, can you just let me know if you can see Mark's screen?
And can you hear me?
And just let us know if you can hear us. Yeah, you're good to go, Mark. You're good to go. First of all,
that's great.
Many thanks for putting this level of effort into this, and we look forward to hearing what you have to say. So, floor is yours, sir.
Okay, that's fine. Well, first of all, I'd like to actually return those thanks both to Mark Cowan, who's done a lot of research with me, and to Bill Ritchie, and mainly to you, Paul, because you put so much effort into your weekly essays, your visits to all the user groups. We all appreciate the work you've done. So I'd like to say thank you for that on behalf of everybody else who is in the user groups. So here we are then. We're going to talk about finding stocks that outperform with the power of VectorVest EPS. So the purpose of this presentation then is to explain the hidden power of stocks with a long-term rising EPS and how to find them, and I'm going to demonstrate the superior returns by using them. A point to note, this is not a unisearch. It's not something that VectorVest can show you in a unisearch. This is a watch list of stocks that you have selected, you've maintained, and that have a past history of excellent performance that we expect to continue. When I first went to a user group to do this, I made 3 videos. The first video was how to find the, start again. Everybody mentions EPS, but nobody dwells on it. 6 months ago, I was listening to a webinar by the Australian VectorVest representative, Russell Markham. He went into depth about the subject, and I was hooked. Basically, we need to ask ourselves, why would we want to invest in a stock with a falling EPS, a company with falling profits that was earning less money than before? So I made 3 private videos on YouTube. The first one was telling you how to find David and Russell Markham on www.vectorvest.co.uk. Go to live events, then UK events. The second video was how I found my EPS Kings, as I've called them. And the third video was where I put these out and said to everybody on the user group, help me out. I can't believe these results are so good. And I just didn't believe the results I was getting. Now, this analysis does work worldwide, it's universal, and I'll show you the power of EPS in a moment on various different countries. I spent many hours researching, backtesting, quick testing, filling notebooks with research to confirm what I was seeing. And it's my personal opinion that this method of stock selection is essential for long-term investing holdings for worry-free investing. In future, based on my own considerable research, I personally now will not consider any stocks that don't conform to what I'm going to show you. I have a lot to go through, so as to give you a deep understanding, so this will be quite fast, but you'll have the recording to go back over to spend time on, and David and I will endeavour to make the slides available as a PDF for you too. So get ready to be as hooked as I was. Those of you that are new to VectorVest may find some of this is rather quick for you, but persevere because it really is worthwhile. Go back over the recordings and see what I'm doing. I made up a whole selection of different watch lists, some that were talking about quality of the stocks, some that didn't pull back very much in last year's pullback at the end of the year. But the thing is, the watch list will never be the same for any two people, as what you select as a visual interpretation is not going to be the same as I'm going to find. So the screenshots, when you're looking through them later to see which Kong Chu you're looking at, just check the small flag on the bottom right of your pictures. So as you'll be able to see when you come back to this later, there's a whole range of different watch lists that I'm using through. Some include watch lists that come from Mark and some from Bill. So what we're looking for, we need to select and make a watch list of the smoothest, best stocks by both EPS and price action, bottom left to top right. Now, Russell always said use 5 years. I've used 5 years as a basic. I know Bill says 3 years. And if you have a really good 3-year chart, that's fine. So price here shown as a weekly 3 and 8 EMA. And as I said, I aim for a 5-year result. So that's what we're looking for. Bottom left to top right on price, bottom left to top right on EPS. As smooth as we can get, smoother the better. What we don't want, a 1-year chart may look promising, but we do need to go to that 5-year weekly chart to see the overall performance. Don't rely on inadequate data. And again, you're using a 3 and 8 EMA chart here. So as you can see, the last year, EPS looked good. Price, although a bit volatile for me, but price was going bottom left to top right. But when you look at the rest of it, that really isn't what we need. It really, really isn't. So finding these charts is not as hard or time consuming as you may think. You can start, as I've said here, with a small mini unisearch. I've got 2 below, but remember to use that 5-year time frame to select the charts. It's easy to flick through them a year and then you realize that you've made a mistake. Make a new watch list, fill it with the best charts. So one way of doing it is you go to your viewers, you sort your viewers by various sorts, whether it's RS, CI, VST. You scroll through the top stocks and you find the ones you want to put into your watch lists. You can check out the Midas Touch stocks and check out the VectorVest model portfolios for suitable choices. And then if you go to the watch lists, the special watch lists, WOW, watch list of watch lists, VectorVest has specially selected a list of stocks being promoted by many sources, many other investors and many other people. It's US only, but a rich source of EPS Kings. But don't forget to use that 5-year chart. So working through this here, then here's just an example of a small mini search. All I'm looking for, 52 weeks ago, I want EPS to be above what it was a year ago, and I want stock price to be higher than it was a year ago. I need relative safety to be above 1, and it's got to be growing a bit. I mean, that's a real minimum, but it has got to be something that's growing. And you'll see here, the stocks that just this simple one has picked up are very much the stocks that we all know about, and that's without going more deeply into it. On the left, you'll see I have UK EPS Kings, a full big list, 155, and I've sorted them like this in my watch lists because I was using these to do my back tests and go right the way through things. Here's another mini unisearch you can use, a very, very basic one. 26 weeks ago, EPS was lower than it was now, and 52 weeks ago, even lower. So that gives you an EPS chart, bottom left to top right. So UK viewers. So this is the UK viewers list. So it's viewers, stock viewer, viewers, and you've brought up all your stocks and they've been selected by the usual VST selected. So the return we have here from January the 9th to the 6th of December, as you see there, is 2.58 down here, and VVC is at 4.8. In fact, it's FTSE, it's not VVC. Now, if you look at the second chart, when we go down a little bit lower, the second chart is with the EPS Kings that I selected, also sorted by VST over the same period. And this returned 54%. When you come back and look at these later, you can see the dates and the VVC returns are identical, and you can see that there's no trickery, there's no false things. You'll see, here we are, the dates are here, the results are here, the results are here by VST, and this is viewers. That's 1,945 stocks in the UK database for VectorVest. And these were the very best top 10 that VST could give us. And we had 2.5%. Going to my watch list, where I have my watch list, which was my EPS Kings sorted by VST, EPS Kings sorted by VST, and ran the search, the same dates, exactly the same. And you can see the results here are 54%. So exactly the same search over the same period of time, exactly the same percent. So all markets have the same results. I had a month's test on the EU after the international forum end of last year. And if you look through these charts a bit later, then looking through the same returns, you'll see that EPS Kings works wherever you are in the world. So you can read through this later. As I say, I'm going to have to be fairly fast to get everything in and perhaps answer some questions. Now, this is the EU. And when I selected then, as you see here, the top 25 by VST in viewers. So these are the viewers, and this is what has happened. So the top 25 by VST, we started here at 100 euros, and at the end of that pullback, we were right down here on 70. So we lost 30% in that pullback in Europe. And by the time we got from here to here, we were down 18%. And of course, quick tests are all just buy and hold. So the EPS Kings, I've said all stocks, because I wasn't intending to present this, it's not exactly correct, but I had 32 EPS Kings. So 25 EPS Kings from VST and 25 stocks from the actual watch list. So my watch list of EPS Kings, I had 32 stocks. So the pullback you'll notice from here to here is just 14%. So we only lost half as much using the 32 EPS Kings I had in Europe. And from here to here, we actually end up with a gain of 36%. To show the power of using the 32 stocks that I said I had in my EPS Kings watch list for Europe, by growth descending, then that there from the 7th of the 1st to the 7th of the 11th gave us a 65% return, and all positive. So the power of the salt. So Warren Buffett's sidekick, Charlie Munger, did explain sometimes stocks are just too hard to bother with. They're too volatile, they're too rough. So I went through my watch list, took out a third that had good EPS action, but poorer price action. And note, the VVC return is just 18.5%. So here we are. The top line is my viewers, stock viewer, the top 10 by quick test. The second line is my big list of US 275 EPS Kings. And then I had a smaller list of 162 that were smoother, less volatile stocks. And you can see the difference as we go down. So the top 10 VST stocks, just from viewers, returned 24%. Using the big list, of EPS Kings is 58%, and sorted by CI for the smaller list is 60%. Moving across the page, I'll do it briefly. Growth for the plain VST stocks. These are the very best 10 stocks out of the 8,000 that this stock had in the US database. So they were giving 11% return. Once we started and changed that list to EPS Kings, we had 94% return. And when I tidied up that list to better stocks, it went up to 109 return. So going over here, further over, you can look through these later. VST times RT times growth for the basic VST top 10 was -3. Using the Kings, 118. And VST times RT times growth, there you go, 121%. Which is why my third video, I said to people, I must be doing something wrong. But I haven't found anything wrong. This is just what's happening. It's magic. So the US, though, does seem to run at a much higher rate of return than the UK. So what I've done here is I've looked at the EPS Kings top 10 quick tests by using different sorts. You can see the dates run and the sorts from the charts when you go back, and you can have a look and see all the dates are correct. But compared to the VVC, this is just buy and hold quick tests of a portfolio of high-grade EPS stocks. No new research, no trickery, no magic, and it's just power. So the first one we have here, now I had 105 in this particular watch list. So a lot of these are just going back over stuff that I have already. But our V times growth descending, we're going from the 2nd of the 1st here, 6th of the 9th, and we've got 101% with an annual rate of 150%, all positive. Moving down here, another test, a different watch list, I'm afraid, 182 in this one, but they're all EPS Kings. As I said, I have a lot of different watch lists, and these are just scans of the different checks that I did. Not specially selected, just random ones. Growth times RT, which I found always gives a really good result. So here we are again. We've got the same date time on it, 123%. Then the third one, just selecting, again, back to my 105 watch list, RT descending. So however you work out the sorts to get these, because they're EPS Kings, bottom left to top right, they performed well in the past, they performed well here. So 91%. And finally, growth descending, just to sort by growth, and there it is. We've got your 127%. It's an unbelievable rate. So the US back tests also gave me some great results. So I'm going to show you a selection of US back tests. Note the drawdowns and note the commissions. Some of them are just too high on commissions. But basically, what you can see here is not absolutely clear, but it gives you an idea. Here was my EPS Kings using a ratchet stop with all the watch lists without a rising 3 and 8. And here you'll see it's a 66%, very low commissions, and an 11% drawdown. And then this one was a ratchet stop again with ratchet stops. These are just some of my quick tests. And you can see I've gone through them with all different sorts of things. And these are the returns that I was getting, which are very, very respectable, with very respectable drawdowns as well. Going on to here is just another one here where I had a selection of different watch lists, 160 in this watch list, and then I moved down to some smaller watch lists. But here you can see the different sorts. These were the searches that I was using in these watch lists and how I was performing. And you can see the returns here that they were actually returning. and the drawdowns. Again, very respectable drawdowns. But this is something you can go back and check in your own time later. So here we are with 160 in this one. Again, it's the US. The stop was sell, no intraday stops, using it on a weekly basis, 120% with just $108 for total commissions, very, very low commissions, 17% as a drawdown. And that's the chart that follows, that's below it, the equity performance chart. So the transaction log for that one, which was right through from the beginning of the year, right through to the end of November, you see the dates up here, 4th of the 1st to the 22nd of the 11th. That's the transaction log. The first 10 were the stocks that were bought, and then we had 6 turnarounds. We only had 6 changes in that year on these stocks. So the quick tests in the US do the same as well. They do give some great results. And the tests were from January to 24th of July, which was about the year high at that time, using various sorts. And I used viewers, stock viewer, the best 10 by each sort. And then I compared them to exactly the same sort on the EPS Kings watch lists. And I did a second set at the bottom half of the page from January and October. Note the VVC readings so you can see that they are over the identical period. So back test here, just using the top is using the stock viewer, the top 10, and here is your EPS Kings, the top 10s. So the very best top 10 VST stocks in the US database from 8,000 stocks gave us a return of 20% from the 2nd of January to 24th of July. EPS Kings over the same period gave us 50%. Growth, 22 compared to 94. CI, 36 to 104. And you can look at the rest and you can see at a glance, VVC is the same as I said. You can see it's just amazing returns by selecting the right stocks. I extended that search 2nd of January to the 7th of October then, using exactly the same, the top 10 viewers from the US database. VST had dropped, of course you had that pullback through the summer and that sort of weak area, that weak thing. 7% for the top 10 VST stocks and 44 for the EPS Kings, 880. So it just stands there, it speaks for itself. Growth times RT, which normally gives the very best results for the EPS King stocks, down here, 108% as opposed to minus 2.5%. The UK also has great results, not quite as high, but they are really, really good. So a selection and quick tests, you can see the dates, you can see the sorts from the charts. And the first chart is the top 10 quick tests from viewers, stock viewer, showing January to December by GRT times RT, showing a loss of 11.8%, whereas the same 10 stock EPS Kings, they returned 48%. Note, these are not cherry-picked, they're not specially selected, they're not the best charts, they're just a whole list of big EPS Kings. So here's your first chart. You've got 1,945 UK stocks sorted by growth times RT with a quick test of the top 10 by this growth, this sort rather, minus 11, and the FTSE's 4.8. So there's your same search there, your EPS Kings with the sort growth times RT. As I said, I put them like this so they're easy to find, easy for quick tests. So this is what we look for. It was the stock watch list, EPS Kings, sorted this way. And there's your return, 48%, still with the same FTSE return of 4.82. So there's no messing about with it. It is what it is. Then just the second one, just from the 2nd of January to the 30th of July again, just growth descending. And you can see there then the top 10 by growth descending from a 74 watch list has given us a 60% return, all positive. And this, as we were saying, is in the UK. Look for little flags there, and that'll tell us if you're looking at UK or the US. So going to the back tests then for the UK. So I did lots more than you can see here. I've got the small portfolios of the small EPS watch list kings, the big list of watch list kings, and you've got here some of the sorts and some of the way that I was actually selecting them. And you can see this, the search that I was using to do them. Some of them had no search at all, just sorted by growth, with different stops on them. And these are things you can just look through. You can see the returns that they were giving, and you can see here the max drawdowns, which are very, very sensible drawdowns for stocks that are holding up really well. So just to prove the point again, so now you can see the power of a great EPS chart using the UK again. VVC returned 7% January to October, and viewers returned almost all negative, but there was EPS Kings did really, really well. So here's the list. So January the 2nd, October the 4th, the top 10 stocks. So out of my 74 EPS Kings, the viewers, stock viewer, have 1,962 stocks in the UK database. Sorting them by growth gave -8, -4, -16, etc., etc. VVC at 7%. Going over to the EPS Kings, you've got 53%, 43, etc. You can see that these are a different sort of thing that holds up an entirely different character to the stocks that have a really good bottom left to top right price action, bottom left to top right EPS action. They really do stand up and work. So we've got a final call to action then. So as VectorVest say, follow the color guard and enter your new positions when VectorVest says it's safe to do so. Working through this, these stocks will hold up better, as you saw in the watch list for the EU when we have a confirmed down, but then that's how you actually work. You should just follow the color guard. So you make your own watch lists of good 5-year EPS charts, sort those watch lists by the sort you prefer, and I almost always have growth as a part of any sort. Then follow the VectorVest timing system that you favor for entries and exits, and monitor using the stocks you prefer. This is what you need to do. So a couple of last facts. I don't have market timing, so all the back tests have no consideration for confirmed up or downs. They're all just as they were, with buying and selling without any consideration for market timing. So the back tests that you'll see here are using various stocks for the exits. All the quick tests are obviously just purely buy and hold, as they always are. And much of this research was started in June, so some of the screenshots from my early research, so there follows a couple of up-to-date screenshots now that speak for themselves, as it says there. January the 9th, 2019 to January the 20th, this is UK viewers, 1,930 stocks. The top 10 sorted by VST gave us, as we see here, 17%, with the FTSE giving us 10%. And over the same date, the EPS Kings, using a watch list of 54, has given us 86% over the same period of time. Again, the same FTSE return 10.76. So you can see it's exactly the same dates, exactly the same method of doing it, and the same sort by VST. So this is a 5-year chart of the EPS Kings watch list, which is the stocks that held up well during the 2018 pullback. I just made a separate watch list of stuff that didn't pull down too much when we get down here. So it's a watch list I think everybody would love. There was a pullback, but it didn't move very far, as you saw on the EU chart. Personally, I like to monitor positions using a 3 and 8 weekly EMA without the noise of daily candlesticks. You might exit when the 3 drops below the 8, when record equals sell, whatever exits you use. But it's a very easy way to do a quick check and monitoring on your positions. Then a very, very basic mini unisearch to use with any watch list, UK, US. 52 weeks ago, as we saw before, 52 weeks ago, the stock EPS is higher than it was then. The price is higher, relative safety is above 1, growth is 5, and I put in CI 1, CI being the one that helps you see that there's a smooth, easy flow of the chart and the price action is good above 1. And the WOW watch list was the one I mentioned earlier, and looking in the American charts, you'll see that a lot of these are ones that we actually do know. So it's going to really be worthwhile you spending that little bit of time to work out your watch list, to work out, do your own selection of stocks that are going to give you some good results. As you'll see, some of my watch lists are really quite small. So in the 40s, 50s, it won't take you awfully long to do that. And you can do your own search, you can do your own tests, your own back tests, and you can prove to yourself that this is something that really works. So I'm going to leave it with you there. Get ready to be hooked. As soon as you do those watch tests, back tests, you make them up and you work on this yourself, you can check for yourself, you can prove for yourself just how powerful this is going to be. Thank you, David. I can answer some questions if anybody has something that they want to know now.
Hi, Mark. That was a wonderful presentation. Thank you very much, sir. And a huge amount of research that's gone into that. A huge amount of research. So there's lots and lots of people are saying thank you. David asks. David in Manchester asks, is there a uni search to do this? I think I can answer that for Mark by saying no, that it has to be done by eyeball. But Mark, would you like to answer that again for David up in Manchester?
Yes, Diane, when you look at the presentation, you'll see one of the very first slides says there is no uni search, because what you're looking at and what I'm looking at, what you think is a good chart, I might think is a bad chart, and vice versa. It's purely personal, it's subjective, and this is why VectorVest can't, the company itself that is, can't say to us, use this search, do this back test. They can't do it. It's got to be up to us now to make our own watch lists and work with our own watch lists.
Trevor says, he says it's an excellent presentation. He says, do you ignore value? The VectorVest valuation.
Yeah, in this particular case, I do when I'm selecting them, but when I'm looking at the stocks, when I'm looking at stocks I actually want to invest in, I will look at value. I go back to the presentation that they had on the International Forum, my three best friends. I love that presentation. It compares EPS, price, and value. And if all three of them are going the same way, you're really on a winner. And if you have the chance to go back and see that international presentation, you really ought to do it. It's my go-to chart if I'm not using this EPS Kings, just the plain one. Next.
Malcolm says, I'm not quite sure about this. Is it possible to add a stock to my watch list from the stocks charts? Malcolm, I'm not quite sure what you mean there. Maybe Mark can understand that. I'm not quite sure what you mean by that, Malcolm. So Steve says great presentation. Morgan says great presentation. Morgan asks, how many stocks do you hold in your portfolio? 10 to 20?
Yes, I normally go for 10, but I have different portfolios looking at slightly different things.
Okay, 10. Diane says thank you. Tony says, what is the OBV chart, please?
Oh, on balance volume. I don't normally use that. That
Okay.
just happens to be on the on one of the charts that I selected to show something else. My apologies. I should have tidied it up and taken it off.
No, not. Unbalanced volume is a volume indicator put together by a guy called Joseph Grenville about 1,000 years ago. Mario says thank you. Keith says thank you. Tim says thank you. Mike is hooked.
Well done, Mike. You're appreciated once you work on it, I promise you.
So Chris from Florida. I can see why you go to Florida every year, Chris. It's a wonderful place. Mark, is the differing, Chris says, is the differing size of your watch list simply a factor of your various searches?
Yes, it is. As I said, I've looked at some searches where I've looked for stocks that didn't come back very much in that pullback, the end of 2018, because stocks that don't fall so far when the markets are hard are the ones that are generally going to perform better and once the market returns. So yes, it's just a selection of watch lists. And as I say, I wasn't expecting to be able to present this. So a lot of my research is just what I was working through, and it's screenshots of work that I was doing as I was going through it.
Okay, well, David says, this is a good one for you, Mark. Do you always sell the stock when it drops out of the top 10 search? I'll let you.
That is a good one. No, just because it's dropped out of the top 10, you don't want to churn your stocks too much. If it's still in the top 15, I'll be perfectly happy with it. So long as it hasn't met its stop, gone back below the stop recommendation equals sell, or your 10%, or whatever stop you use, or the 3 weekly going below the 8 weekly. If it's actually still a stock that's a valid stock, just because it's dropped out, I wouldn't change it. Okay. As long as it's in the top 15 or so.
That makes good sense to me. David S. says thank you. Bill says thank you. And Keith says don't tell the Americans. Julian says thank you. Tim would like a list of the steps. So maybe if you could quickly walk through the steps that you do, if you can, Mark.
Well, basically, let's see if I can flick back up here somewhere. So we know what we're looking for. Bottom left to top right, nice and smooth. We don't want something that's all over the place like this. That's something to avoid. That's really not what we want. So as you say, finding the EPS charts, really, it's not, as I said there, too hard. You won't end up with a little mini search, something like this that you can make up. And as you can see here, this little mini search, which is so basic, then it's brought up all these super stocks. So then what you would do, you'd look at all these, you look at perhaps the top 50 here, and anything that has that nice smooth chart pattern that you want, write it down on a piece of paper and then stick it into a watch list that you make. And you can make up as many watch lists as you want. So another little mini search there.
If I can ask the question, Mark, from all of your research, which sort, if you were putting your money in the market after you've done the EPS Kings research, the eyeball we've just talked about, which sort would you favor?
Growth times RT.
Growth times RT. Thank you. Well, couldn't be
every time. Growth times RT.
T.
Growth times RT. Growth times RT.
So Tim, those are certainly steps to start with, sir. Run that Unisearch, then just eyeball some charts. And although Mark says it's subjective, I found that there's 80% of the charts that I would choose would also be on Mark's list. So there's a great deal of common ground I've found. So I hope that answers that question, Tim. Manish asks, what is an EPS King? Is it a predefined watch list? So we've covered that, I think, in the last question, Manish. It's something you've got to sort of eyeball yourself.
It's just something that a name I put to the watch list that I made. Just I called them Kings because I felt they stood above the rest. It was just a name that I made up.
Okay. Well, Carwin says he's EPS hooked. Lionel, how are you, Lionel? Lionel asks, that's a good question, Lionel. How often do you review and refresh your EPS Kings watch list?
Every time I'm doing a back test or any test or any Unisearch that has a stock in it that I like, I always just make sure I add it to it if it's not in. And when I leave everything in my watch lists as I'm adding to them, because some stocks may have been really good when I selected them, but be really sort of dropping off now. And they're ones that I will avoid. But I can see that when I do the charting on them. So although they might come up quite well on growth times RT, the EPS might still be falling off, and they aren't the ones that I would want to use. So I don't change my charts, my watch lists at all. I just keep them going. But when it comes to select them, I do make sure that the charts have the right price patterns that I'm looking for.
Okay. Bodo, hi Bodo. Bodo, if you've listened to the last few, maybe you've got the hang of it now. So it's a matter of doing the search that Mark proposed, then eyeballing shares that are prices growing with smooth earnings per share growth from bottom left to top right. And then to start with, the growth rate times RT seems to be the best sort. So, folks, let's... Malcolm. Malcolm says, I want to avoid going back to the search list in order to add a stock to a watch list. Is it easy to add from the chart?
No. Unfortunately, VectorVest, I've asked them if they can do that, so you can just right click on the chart and say add to watch list, but you can't.
Yeah, I didn't think you...
Which is a pain in the butt. You've got to write them down.
Okay, thanks, Malcolm.
If you're using an iPad, or then the mobile app, you can look at the chart. You then have to go back a page to the overall picture of the chart, not individual candlesticks, and you can add to watch list there. But I work on a laptop and just take write it down, a paper list.
Okay, Chris says thanks. Roy in Durbanville in the Cape says thanks. Jonathan asked, have you tested through 2007 and 2008? Alan is very excited. Hi, Alan. And Nigel. I'll have to ask about that, Nigel, offline. And Trevor, we'll get the slides to you, sir, okay? If you don't get them, Trevor, just nag me, okay? We're going to get the recording, certainly. Harry says, if a stock comes up in more than one watch list, you buy it twice. You know, Harry. Okay, folks, I think that it is 2:30. Mark, thank you once again for a wonderful presentation. And next week, folks, we'll have Bill. Now, Bill and Mark, I put them together because I noted from the user groups we have in Scotland that Bill, in fact, was doing something very, very similar. So they've been chatting together, and our other Mark from Guildford, we'll have him on. He's just finished some house repairs, so we'll have him on towards the end of the month. So next week you'll be getting another interpretation of largely the same methodology, but through the eyes of a different trader, both exceptionally experienced individuals in life and in the trading market. So Mark, thank you very much, sir. And
I did say I'd like to apologise for being so fast, but I know that a lot of people just don't have time to hang on much longer, and I did want to get everything over so as to get them hooked, because I feel it's so useful to everybody.
Well, I think that if they're not hooked after that presentation, they'll never be hooked, Mark. So, folks, this is sort of the theme that I want to try and run. There's an enormous amount of investing expertise in our user groups, and I want to make that available to everybody around the country. So we'll be running lots of these during the course of 2020. I think, folks, that for those of you that are position traders, maybe in stocks with a low relative safety, one needs to be very careful over the next few days. All right, I think you need to sit down with your portfolios tonight and decide exactly what you're going to do. If you're going to ride it out in high RS stocks, that's wonderful. If you want to hold on to some outstanding profits that we made in 2019, then I think you need to think very strongly this evening where your line in the sand is. It's certainly something that I'm going to do later on today. So we have no idea how long this is going to last, whether it's a small little pullback and it's all going to fizzle out, or whether we've got a October, November, December 2018 on our hands, or worse. And the situation in China looks as if it's going to get a lot worse before it gets better to me, but what would I know? Mark, thank you again, and cheers, everyone, and I'll see you again next Monday afternoon. Tomorrow evening we have it's largely a starter presentation, so those of you that want to get your mind around RS, RT, RV, if you go to the website, it's called A Proven Methodology, where I'll be looking at our mechanical worry-free methodology. But it is a starter presentation, folks. So many of you who are members will have heard it all before, but you're more than welcome to attend. Okay. Take care of yourselves, everyone. Thank you again, Mark. Bye-bye.
No problem. Pleasure.
Cheers now.
Bye-bye.